of course, lower. 3 minus 3.5 is not possible. So which means also there's no rollover relief here. There's no rollover. Dash. Rollover is dash. But our net capital gain till net capital gain is nil. So you say there is no, the answer here is there is no rollover relief on generating sets. Yeah, that is the answer. There's no rollover relief on the generating set. So that's the big part of the question. So I think C now we should determine capital gain tax payable. So C. So we want to look at the computation of capital gain tax paid. So in that case now, let's start with the building. Yeah, building. For building, you know, for building, you should know that for building we don't even have, if you go back to the question under the B, okay, let me just do it again quickly. Sales proceed, which is 30 million. 30 million. Cost of acquisition is 25. If you minus, you get 5 million as the capital gain. But remember, roll over relief, lower of sales proceeds, you know, which is 30 million, or amount reinvested, which is 65 million. Then less costs of the old asset, which is 25 million. So 30 minus 25 is still 5 million. So 5 million minus 5 million, our net capital gain is nil. Then capital gain tax, 10% of that is also nil. So we don't have capital gain tax on the building. So that, of course, you should also know that the equipment is actually lost. It's a capital loss, so which means that one will just ignore it. Then let's go to generating set. Generating sets. For generating set, of course, sales proceed for generating set, you know, as we said earlier, sales proceed for generating set is sales proceed for generating set. Generating set was sold for 4,300,000. Then cost of acquisition for that generating set, you know, is a 4. Okay, generating set is 3.5. So which means 800,000 is the capital gain. Then you should know that, of course, our rollover relief, sales proceeds, which is 4,300,000, or amount reinvested. Now, the cost of buying the new asset is actually 3 million. Then the costs of the old assets is what? 3 0.5 million. It cannot. 3 million minus. So here is nil. Nil. Here's nil. 800,000 minus is still 800,000 is my net capital gain. Net capital gain is 800,000. Therefore, my capital gain tax is 10% of 800,000, which is 80,000. So that is the C. So let's go to the D part. That's the last part of the question. The D, which is called, they say we should calculate the cost of the new asset. Now, those new assets they acquire. Remember, they acquire the new asset, which means they acquire, new building, they acquire new equipment, and also, sorry.
Don't use your body to cover it. You're covering the right up. So you have to be stretching. That's why I say you should be using the maybe.
I understand. So, D now. Now, for the D say we should compute. D say we should actually compute for the cost on which capital allowance will be granted to the company based on newly acquired. Now, remember, new assets were acquired. New building was acquired, apart from the one that was disposed. New equipment was acquired, and new generating set was acquired. So they want us now to determine what is the cost. Now, the new amount might not be the cost of the asset, because if you want to now get the costs of new assets is equals to the amount reinvested, amount you invested minus amount roll over. That was going to give the cost of the new asset that you are going to base in computation of the capital allowance. So now they're asking us to compute computation of the new asset cost, computation of costs of new asset acquired. So let's start with the building. Of course, you should know that for building, the amount we reinvested, which means the cost of the new asset, is 65 million. And the amount that was rolled over, if you check, discover that building has 5 million that was, so which means 5 million, which means 60 million is the cost of the new asset that we're going to use our capital. Then for equipment now, if you check for equipment is 7.5, right? That's the amount reinvested is 7.5 million. Amount rolled over, there is no any amount rolled over here, it's dash. So which means 7.5 million is the costs of new assets. Then, of course, generating set. For generating set, amount reinvested for generating set is actually 3 million. The amount roll over is dash. 3 million is the cost of the new assets. So that actually brings us to the end of this session on the rollover relief. So remember, we're talking about the cost of the new asset. When you are talking about cost of the new assets that we are going to base our capital allowance on, we are going to say the amount reinvested, which means the cost of the new asset you acquire minus the amount you roll over. So the building, amount we invested on building is 65 million. We invested 65 million in the acquisition of building. So the amount we rolled over was 60 million. So which means 60,000 is the cost of the new asset. It's no longer 65. Yeah. That we're going to base our capital allowance on. The equipment, we reinvested, we buy the cost of the new asset is now 7.5, but we don't have any amount we rolled over. So which means 7.5 is the cost of the new asset. Then the generating set, the amount we reinvest is 3 million. The amount that was rolled over is dash. Then 3 million is still the amount of the cost of the new asset. So that is the end of this thing. So thank you.